Financial Accounting, Introduction to Accounting Cycle. Part 2. The accounting cycle starts with journal entry and, it, ends with financial statements for the current year. The accounting cycle steps. For Part 2. 5. Adjusted trial balance. 6. Preparing income statement. 7. Closing entries. 8. Statement of retained earning. 9. Post-closing trial balance. 10. Other statements preparation. 5. Adjusted trial balance. Accountants create adjusted trial balance from ledger's accounts. One. Prepaid rent decreases by $833 in account number 110. The adjusted balance is shown in trial balance. 2. $833 of rent expense in account number 1160 is transferred to trial balance. 3. $10,000 of unearned revenue is decreased in account number 660. The adjusted balance is 0. 4. $20,000 of sales revenue in account number 1000 is transferred to trial balance. 5. $10,000 of account receivable in account number 200 is transferred to trial balance. 6. $10,000 of salaries and wages expense in account number 1200 is transferred to trial balance. $10,000 of salaries and wages payable in account number 720 is transferred to trial balance. 7. Total debit side equals total credit side. 6. Preparing the income statement. Income statement accounts come from adjusted trial balance. In addition, the type of accounts that include in income statement are called nominal accounts. Nominal accounts are revenues, operating expenses, non-operating expenses and others. The first account we have in this example is sales revenues. Sales revenues present in the top of income statement. Secondly, salaries and wages expense are considered as operating expense. Furthermore, rent expense is included in operating expense section. Seven. Closing entries. nominal accounts should be transferred to retained earnings. This happens by decreasing income statement accounts to zero. The difference between debits and credits is retained earnings. Eight. Statement of retained earnings. Statement of retained earnings is used to calculate the ending retained earnings. It starts by adding beginning of retained earnings minus dividend plus net income or net loss. Nine. Post-closing trial balance. Post-closing trial balance shows assets, liabilities and stockholders' equity accounts. These accounts are real or permanent. They move to the balance sheet for current period. In addition, permanent accounts can be updated for future periods. Ten. Other statements preparation. Balance sheet is created from the post-closing trial balance. Balance sheet main classifications are assets, liabilities and stockholders' equity. Firstly, assets accounts should be moved to the top of balance sheet. Secondly, liabilities account should be moved to the middle of balance sheet. Finally, stockholders' equity account should be moved to the bottom of balance sheet. Total assets equals total liability and shareholders' equity.